Hello, I'm Hanna Howard, a research analyst focused on media and broadcasting here at Gabelli Funds. Today I will be discussing Sinclair Broadcast Group, which trades under the ticker SBGI on the NASDAQ. The company reported fourth quarter and full year 2022 results this morning and hosted a conference call. SBGI shares are trading down around $1.30 or over 7% today following the company's earnings release and call. For some quick background, Sinclair Broadcast Group, which was founded in 1986 and is headquartered in Hunt Valley, Maryland, is a diversified media company and leading provider of local news and sports. The company owns, operates, and/or provides services to 185 local television stations in 86 markets, as well as the largest portfolio of regional sports networks, or RSN brands, in the U.S. The RSNs own the exclusive rights to air the games of professional sports teams and other sporting events, and serve as the TV home to more than half of all MLB, NHL, and NBA teams. We note that this business, which goes by the name Diamond Sports Group, or DSG, was deconsolidated from Sinclair's financial reporting back in March of 2022 and is a separate credit silo. Sinclair also owns and operates multiple national networks, including the Tennis Channel, and makes equity investments in strategic companies. This includes a partnership with Bally's Corp, which drives increased monetization opportunities for the company through sports betting. As part of the deal, Sinclair also received warrants to acquire an equity stake directly in Bally's. Additionally, either directly or through its venture subsidiaries, the company also owns various non-media related investments, such as a private equity and real estate. In terms of Q4 2022 results, media revenues, adjusted EBITDA, and adjusted free cash flow all met guidance, and media expenses were favorable to guidance. Total advertising revenues for the quarter were record highs, and strong political advertising revenues more than offset lower distribution revenues due to subscriber churn. Looking back over 2022, Sinclair took several actions to increase shareholder value, including raising its dividend by 25%, buying back approximately 5 million shares, or roughly 7% of the shares outstanding, and repurchasing $118 million of face value of Sinclair's 2027 notes at a discount. This month, the company also purchased the remaining outstanding Diamond Sports preferred units, which had a coupon of over 12%, and for which Sinclair had a guarantee of collection. In terms of risk, Sinclair faces economic risks associated with overall advertising spending. In addition to an economic slowdown, traditional advertising formats, including broadcast, are facing increased competition from the internet and other new forms of media or alternatives. Additionally, weaker retransmission revenue performance and outlook has created questions about long-term industry pressures, which we expect to weigh on the stock and sector near term. We would note that Sinclair also carries more debt than some of its broadcast peers, with total long-term debt of $4.265 billion and total net leverage of 4 times at year-end. Looking ahead to Q1 of 2023, media revenues and adjusted EBITDA are both expected to decrease on a year-over-year basis, primarily due to the absence of political advertising spend, lower net retransmission revenues, and a change in the company's RSN management fee. While broadcast trends are tougher, Sinclair generates significant free cash flow, and further buybacks could support the stock price or drive it higher. Cord-cutting trends could improve, driving better than expected retransmission revenue for the year, and political advertising for the 2024 presidential election could prove significantly higher than prior periods. Lastly, the FCC could move towards a deregulatory stance for broadcast that would allow Sinclair and peers to consider new station M&A transactions, which tend to be highly accretive. Even when assigning a 7 times multiple, which is a discount to precedent transaction, to Sinclair's blended 2-year average trailing 12-month broadcast EBITDA, and valuing its investment portfolio at a slight discount to the company's estimate of $1.2 billion, or almost $17 a share, Sinclair shares look inexpensive and remain attractive in our view.